TGIF, everybody. It is Expiration Friday. It's the closing bell here at MarketStream.live. My name is Joseph Cusick with the Cusick Group. Securities offered by Money Block, May 19th, and it's the great bounce back. The last two sessions have been impressive. We had the dip at 1.8% on the S&Ps, and we had a nice rally today, up almost 0.7%. So basically, you had the S&P 500 finishing the week only down 0.4%, and that's pretty impressive after the pullback that we saw two sessions ago. The rally got us back into this battle zone. You can see right now here on the S&P 500, we're right here, right in between that 20 and 50-day moving average. For the bulls, this is a sigh of relief. For the bears, I don't know. Maybe it's a simple setup here. We're going to have to wait and see. There's a lot of uncertainty in the markets as far as the geopolitical components going on. As a matter of fact, we continue to hear headlines, and the Sunday morning and Saturday morning pundits are going to have a field day this weekend, both in publications and on television. So it should be a pretty eventful headline type of weekend. But the markets, let's get back to the markets. Taking a look at the Dow Jones, finished the day up almost 0.69% to the upside. That's good for 141 points at 20,804. And again, as I've shown you all for the last couple of months, the only reason why I use charts is because it gives me a visualization so that if I see a 1.8% drop in a market in one day, most people are panicking. They don't know how to look at it. And when I looked at this, all I saw was that the markets went through in one day a 20 and 50-day moving average. That means that people that have been getting into the market for the last 20 and 50 days are being knocked on their heels. Not on their butts yet, but they were knocked on their heels. So that's why I looked at this and I didn't see follow through the next day. That's right here. That was yesterday on Thursday. With this bounce back, it still had to challenge its 50-day. It challenged it, and it went through, and now it's challenging its 20-day. So the intermediate term, or more the institutional traders and investors, they are still in the market. They took an opportunity to buy this dip, and they got the market back for the week, only down 0.4% in the S&Ps. The Dow was only down fractionally as well. The NASDAQ continues to outperform. Challenged its 20-day moving average, but was able to settle above it last night, and was able to settle above it as well as open above it today. So again, you see that the bulls are still in control. These are the reasons why I look at this stuff. Not that it's any crystal ball for me. It gives me context so that I'm not freaking out over my portfolio. This allows me to be a prudent and a balanced trader and investor. Taking a look at the Russell 2000, again, bouncing off of the lows, but the bears are clearly still in control right now. They're below the 20 and 50-day moving average. So we're going to watch agendas after the president gets back from his international trip. We're going to watch healthcare, tax reform, so on and so forth. We're going to watch the economic data much more closely than we have. And right now, I think the markets are going to grind at this juncture. The dollar, not grinding, sliding to the downside. Earlier this week, it just pulled back, and you can see that it has been in a bearish trend. As a matter of fact, the dollar went out at 97.13. That weakness is giving a lot of bolster to commodity markets, specifically oil. Now, oil has two factors working for it. The weak dollar here in the U.S., so the West Texas contract was up today, 99 cents. That's good for 2%. Got over that $50 level. So a big psychological mark as well as resistance. Getting over 49 bucks, 49 and some change. Now it's above its 20, its 200-day and 50-day moving averages. So the bulls have taken control with the dollar weakness and with the news that OPEC is going into their meeting, basically agreeing that not only are they going to adhere to future production cuts, they may actually increase the amount that they're cutting. Now again, I take this all with a grain of salt, because once you start seeing oil get north 50, 55, and maybe even challenging 60, a lot of these countries need that revenue. I'll be very surprised if they continue at the pace and increase the amount of production cuts. But watch the Brent contracts. That's the CB contract that I'm showing here right now. They're in a battleground. They still haven't bought in as bullishly as the West Texas contract. And again, the West Texas contract is the crude that's pumped here in the States. And we have record rigs right now. We have record production. We have record stocks. In other words, we still have a stockpile, a glut of oil. The draw was much smaller than expected this week. So we want to really watch this. Plus, if you have any type of slowdown in the economy, or if agendas aren't getting through and that starts to spook the market or the consumer gets weak, boy, I'll tell you, that could really put the brakes on the crude rally. Taking a look at the bond markets, very mixed today. Basically just stayed flat, but the bond markets have been incredibly impressive as far as continuing to move on the upside on price. That means that people are still parking some dough in bonds and you're seeing yields come down. As a matter of fact, as you know, I like to keep an eye on that 10-year yield. That's a nice barometer for me, the health of the bond markets, and bond prices have been holding up, and the yield right now went out at 2.23%. What's impressive about that, at the beginning of the week, we saw bond yields over 2.4%. So we see a significant drop and on the bonds, and that really hasn't tapered off. You can see that the yield has been grinding all week. So very interesting. A couple names that I want to take a look at today because I think they were market movers, and there are stocks that are starting to show leadership beyond just the FANGs, the Facebooks, the Apples, the Googles, Amazons, and so forth. Deere was up today 7.3% on great earnings. That's good for $8.23 to the upside, trading at 120.90. You saw that it challenged this 20-day moving average, right? The day before, after a grind, goes into earnings, good earnings, boom, everything took off. So the bulls were clearly still in control. All they needed was something to catalyze them to the upside, and guess what? They got it with good earnings. That also helped their peer, somewhat of a peer, large cap Caterpillar. CAT was up 221. That's good for 2.2%. So they were up, and they bounced off of their 20-day moving average. So again, the bulls have garnered some control in conjunction with the move in with Deere. Now, taking a look at the tech markets, you can take a look at the NASDAQ or the Qs. The Qs bounced today, but they stayed in a very tight range, lagged their larger cap peers. And really, the reason why, take a look at it. Apple, which in full disclosure, I do have a position in Apple for my clients. Apple lagging. Microsoft lagging. Interesting thing about Microsoft is that it's actually in between its 20 and 50-day moving averages, folks. The bulls are in a fight right now, and they're going to have to hold that 50-day moving average right now. That's coming in at 66.81. Watch that level very closely next week. These are stocks that have been carrying the market on their back. And one other one, always out there, CRM. CRM opened up on its highs, well over 90 bucks. Pulled back, was down 35 cents for the day. So you can see that there was a huge range in CRM, and now it's challenging its 20-day moving average. The bulls got knocked on their heels today, and it was after some decent move and range going in there. Another thing that's notable is, again, the U.S. dollar. This is the lowest level since November, as we had noted. And finally, the Fed Funds futures. Taking a look at the Fed Fund futures tool that they have at the CME. If you go to CMEgroup.com and look at the interest rate countdown to the FOMC, basically 25 days out, even after the move that we saw in the equities, after the pullback and then the bounce, there's still a 78.5% probability that they're going to raise rates in June. So in 25 days, there's a 75% probability that the interest rates are going to be 1% or higher. In other words, between 1 and 1.25%. Or as they put it here, 100 to 125 basis points. Very interesting. On Wednesday, we weren't having that discussion. After the reaction of the market, basically even statistically, that got down into the 60s. Now it's back up in the 70s, high 70s, almost touching those 80s. We're going to watch that very closely because there's going to be a scrutiny on not only the equity market reactions to just the headlines and so forth, but we're going to watch the economic data, not only here domestically in the United States, but globally. All right, folks, there is plenty of homework to do over the weekend. As a matter of fact, do two things. One is you can always go back and take a look at all of our archived material on Facebook. Just go to facebook.com and then type in @MarketStream. You can go to MarketStream.live. That's our platform. That's the platform. And you can see all of the content that I develop, as well as other content pieces under the premium content component. There's some really cool tools and applications. And you can go look at the latest videos. In other words, the archives, both for the strategy discussions, as well as tech talk and so forth. So check all that out this weekend. But till then, I will be back Sunday night for Sunday Night Setups. Join me. Futures will be open. We'll be able to start giving you visibility on what you could expect going into next week. Thanks for watching this week, and I look forward to seeing you on next week. Take care, everyone, and have a great weekend.